Today, New York's mayor announcing a new vaccine mandate. All private sector workers will have to get the shots. Young children, too, if they want to go to the movies. And airlines switching to sustainable aviation fuel, even cooking oil, to fuel their planes. What's the benefit? And China lowers its reserve requirements for the second time this year. What does this tell us about China's economy? That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. New York City has a new vaccine mandate. This time it's for private sector employees. Mayor Bill de Blasio says they'll either have to get a COVID-19 vaccine or face termination.
It is time. Look, this is how we put health and safety first, by ensuring that there is a vaccine mandate that reaches everyone universally in the private sector. A lot of folks in the private sector have said to me they believe in vaccination, but they're not quite sure how they can do it themselves. Well, we're going to do it.
De Blasio called it a preemptive strike against the Omicron variant and a potential winter spike. It'll impact 184,000 businesses in the city. The mandate deadline is December 27th. In addition, children as young as 5 will soon have to show proof of one vaccination dose for movies, indoor dining, and fitness clubs. Cities reporting a 7-day average of nearly 1,600 cases. That's the highest since September, but well below the 2 largest waves of the pandemic. And the Biden administration says it's going after corruption and illicit finance in real estate. The Treasury Department is working on a potential rule that would target people who use real estate to launder money from criminal activity. It would also go after those who abuse the market to hide their wealth. The Treasury Department is now asking for public opinion on the proposed rule. And while other retailers are struggling with shipping backlogs, Amazon has been able to offload goods at ports in just a couple of days. So what's the key to its supply chain success? NTD's Fake Quarter takes a look.
Amazon is making its own containers, chartering private cargo ships, and leasing long-haul planes to beat supply chain chaos right now.
It's just a huge advantage where if their competitors end up running out of stock.
Through chartering smaller vessels with cranes on board that can offload the containers themselves, these goods can go into ports without any congestion. Amazon has made huge investments to control as much of the shipping process as possible. According to SJ Consulting Group, Amazon now uses its own transportation network to ship 72% of its packages. That's up from about 47% in 2019. Rick Watson is the founder and CEO at RMW Commerce Consulting. He says Amazon's foresight plays a key role in its success right now.
Forward-looking in this market, they've been investing in global ocean freight for the past 3 or 4 years. They've been investing in logistics for the last 5 or 6 years because e-commerce was increasing so fast. And they saw that the traditional carriers would not be able to handle it.
The CEO of FreightRight Global Logistics elaborates on Amazon's competitive shipping strategy.
Amazon was chartering their own vessels just to move these containers. It just so happened that when the crisis started, these smaller vessels became very much in demand, but Amazon had already secured them and already secured port arrangements to unload these vessels and had all these empty containers that they were building in China moving to the United States.
Maritime industry expert Sal Mercogliano thinks this innovative process is something only bigger companies like Amazon can do.
Because the freight rates are so extraordinarily high that they're willing to take this risk and really pay a little bit more money to get cargo delivered before deadlines, specifically the Christmas holidays.
This season, some other major retailers, including Walmart, Costco, and Home Depot, are also chartering their own vessels to get their goods unloaded sooner. Faye Quarter, NTD News.
And oil prices climbed by nearly 5% today. Perhaps on hopes the Omicron variant would have a less damaging economic impact than previously expected. Also, some OPEC member countries signaled confidence in the market. Brent crude is now at about $73 a barrel. WTI is about $70. A new report from South Africa says the Omicron variant may lead to less severe cases than earlier strains. Also boosting oil prices, Saudi Arabia yesterday raising January selling prices to Asia and the United States by up to 80 cents from the previous month. The World Petroleum Conference kicked off in Houston today with top executives from energy companies saying the need for more oil will stay for decades to come. So joining us is Carr Ingham, petroleum economist at the Texas Alliance of Energy Producers. Carr, great to see you. Thanks for coming on.
Thanks, Paul. Great to see you as well.
Carr, we see the oil markets really on a roller coaster the past couple of weeks. WTI up significantly again today. What do you think traders are watching most closely?
I think mostly they're watching the global economy, the general condition of the global economy, wondering about whether or not this new COVID variant is going to cut into activity. This is an economy and an oil market that continues to detangle itself from the COVID economy of last year, clearly. And so there's a lot of other things happening in the background, government noise in particular in the U.S., all of this related to the release of oil from the petroleum reserve and all of that. But I think by and large it's the global economy as relates to COVID that's driving oil markets right now.
And I think between the pandemic and COVID and also government policies and social environment, et cetera, it's kind of unprecedented uncertainty for, we'll focus on American producers at the moment. Are we seeing investment in production or?
Well, there's certainly some investment in production, and I think that's going to ramp up some going forward. But you're not wrong about that. I mean, this has been a year of certainly political uncertainty in the U.S. with regard to fossil fuel production, crude oil and natural gas. I mean, there's very little doubt about the fact, whether you think it's a good thing or a bad thing, there's very little doubt about the fact that this is an administration and a Congress that exhibits an open hostility toward domestic petroleum energy production. And so that quite naturally has operators concerned. And there certainly is this question about whether investment dollars will be met with the kind of return that investment dollars would require to be put down in the first place, given what may happen in terms of policy going forward in the United States.
Worth keeping an eye on. Carr Ingham, Texas Alliance of Energy Producers. Appreciate it. Thank you.
Pleasure's mine, Paul. Enjoy the visit.
And Toyota is preparing to build a $1 billion electric vehicle battery plant in North Carolina. Government officials say the facility will employ at least 1,700 people. In October, Toyota announced its plans to build a new U.S. factory. It's going to make batteries for hybrid and fully electric vehicles. It said the plant would start making batteries in 2025, gradually expanding through 2031. Toyota plans to spend over $3 billion in the U.S. in automotive batteries over the next decade. And British Airways has signed a historic deal. It'll now start using used cooking oil to fuel its planes. NTD's Evelyn Lee has more on what exactly that means.
British Airways will start using sustainable aviation fuel, or SAF, starting next year. Austrian Airlines partnered with international oil and gas firm OMV to do the same. And United Airlines also just went on a flight that it called game-changing. With a tank of pure sustainable aviation fuel, it carried more than 100 passengers from Chicago to Washington, D.C. The fuel is refined from material that already exists in the environment. That includes cooking fats and plant oils rather than fossil fuels. The companies say that it can reduce life cycle carbon emissions by over 80% when compared to traditional jet fuel.
And not only CO2, but non-CO2 emissions are also reduced. So by that, I mean particulate matter, soot that generally generate from smoke that comes from combusting jet fuel is significantly reduced using SAF.
Pratik Chandoke works on the renewable aviation team at oil refining company Neste. He says there are health benefits for communities near airports.
And these aircrafts are burning this fuel on the tarmac, and all of that pollution is really disadvantageous to those communities.
Some airlines already blend SAF into the fuel they use, but the American Society for Testing and Materials currently limits it to 50%. Right now, there are still doubts the world could sustainably produce enough SAF to power the entire industry.
Neste is one of the two producers of sustainable aviation fuel globally at the moment, but there's a lot of things happening.
He says other suppliers are looking into producing SAF, and it's gaining support from the government. Evelyn Lee, NTD News.
And shares in electric vehicle startup Lucid fell today after the company said it was subpoenaed by regulators. Shares slid 18% at the opening bell, recovering, but they're still down about 5%. Lucid says the probe appears to concern a deal that took the company public earlier this year. Lucid started trading on the NASDAQ after merging with a special purpose acquisition company, or SPAC. That transaction injected about $4.4 billion into Lucid on terms that valued the company at $24 billion. But SPAC mergers have looser regulatory requirements than traditional IPOs. They've also come into regulators' crosshairs due to overly optimistic revenue projections. Lucid said, though, it's fully complying with the probe. And a social media platform founded by former President Donald Trump says it secured $1 billion of investment dollars. But Trump Media and Technology Group didn't say who the investors are. Trump wants to take the company public through a SPAC merger with Digital World Acquisition. Also, Digital World Acquisition revealed today that it's under investigation by federal regulators, including the SEC. It's unclear why. Trump launched his new company back in October and unveiled plans to compete with Twitter. The platform is called Truth Social. Trump is the chairman of the company and will get tens of millions in bonus shares if it performs well. And China's central bank has reduced the reserve requirement ratio for the second time this year. So why is it doing this, and what impact will it have in the United States? NTD's Chenny Wu talks to two experts.
China's central bank is reducing reserve requirements. It will lower the ratio by 0.5 percentage point on December 15th, releasing the equivalent of $188 billion. This is the second time this year it's changed the requirements. The bank says the cut is a regular operation of monetary policy and that it was done to better support the real economy.
Cutting the reserve requirement means banks don't have to keep as much money on hand than they used to. So say, for example, a bank had $100,000 on hand and the reserve requirement was 10%, they would only have to keep $10,000 on hand. The other $90,000 they can go ahead and put back into the economy by lending it out to people.
Nicholas Creel is an assistant professor of business law at Georgia College and State University. Creel says China's move is a sign of desperation.
It's pretty clear at this point that China's economy is much weaker than the government's formally letting on. I think it's always been in the back of our minds that their COVID-0 policy, shutting down entire factories and provinces to go ahead and get us to mitigate as many cases as we possibly can down to zero, is making their manufacturing sector shut down for sometimes weeks at a time. That's taking a big economic toll.
Milton Ezrati is the author of Bite-Size Investing. Ezrati says they may not be that desperate.
If the Federal Reserve had done it in the United States, I think it would be a sign of some kind of desperation. But the People's Bank of China uses this particular tool, so I think I'm agreeing with the government in Beijing that this is probably misinterpreted.
Ezrati thinks China is eager to cover the damage from the Evergrande scandal as well as damage from other debt-burdened firms that aren't publicly known yet. And this decision carries big risks.
It encourages borrowing, and China already has a great deal of debt. By giving the banks more facilities to lend, you have more borrowing. That's one risk. The other is ultimately down the road, by freeing up more liquidity, by effectively putting more money into the economy, you run the risk of inflation. And China's a command economy, but it still runs that risk.
Ezrati says China's decision helps the United States. The more active China's economy is, the more buying there is in the U.S. Chenny Wu, NTD News.
And China Evergrande shares plunged to an 11-year low today after it said there were no guarantees it could repay its huge debt, currently standing at more than $300 billion. Today marks the end of a 30-day grace period on a payment it owed of tens of millions of dollars. Evergrande has now set up a risk management committee seeking to restructure its debt. ITT says the committee includes state officials who would help it mitigate future risks. Beijing's central bank has tried to reassure the market, saying that housing sales, land purchases, and financing have already returned to normal in China. If Evergrande were to fold, though, it would trigger a wave of defaults, that would ripple through the country's property sector and beyond. And still to come this evening. It's that time of year again, and ice hotels are rising from the ground for the full Winterland experience. That and more coming up on NTD Business. Welcome back. Some grad degrees don't seem to be paying off. It's taking professionals in certain fields a lot longer than they expected to pay off their student loans. NTD's Phil Zoe has the details.
Professional degrees in fields like dentistry and veterinary are leaving many students in major debt.
Graduate and professional students are still having to increase their student loan borrowing to put up with these higher costs of these advanced degrees.
The median debt for many professional programs are over $200,000, while the median income for professional jobs like veterinarians are $99,000, and for chiropractors it's $70,000.
Those degrees do not always lead to the high-paying careers that those borrowers expect, and even if they do, those careers may not provide enough of a salary cushion to pay back that debt.
For loans that don't get repaid within 20 to 25 years, they usually get shifted onto taxpayers through the student loan forgiveness programs. New York University has one of the biggest dentist programs in the nation. They tell students to expect spending over $500,000 on the 4-year program. Meanwhile, the median debt for the 2016 graduating class was $350,000. The median income 2 years later, $82,000.
When they're taking on the levels of debt that they're taking on, it becomes just important to take any job. The right job isn't necessarily the priority. It's important to start paying down those debts and those bills right away.
When a student's unpaid balance is forgiven, the amount will count as income. Students are still responsible to pay the corresponding tax on the forgiven amount. Phil Zoe, NTD News.
And Customs and Border Protection are telling holiday shoppers to be on alert. More than 13,000 counterfeit designer products were seized in a cargo ship from China. Customs officers at the Los Angeles Long Beach seaport intercepted shipments of fake designer bags with clothing with fake logos of Gucci, Chanel, Fendi, YSL, and Louis Vuitton. The agency says if the seized merchandise were genuine, it would have a combined value of almost $30.5 million. Agency also says counterfeit products are now being posted as seemingly legitimate listings on well-known websites. Especially when shoppers are looking for deals during the holiday season, Customs and Border Protection says China is still the primary source of the fake goods. And organizers of a major European startup event say the tech scene there is booming, despite news of the new variant. They expect investment in European companies to be way up this year compared to last. So NTD's Andrew Thomas takes a look.
Europe's tech scene is humming, and one of the world's biggest venture capital gatherings is full speed ahead, despite news of the new variant. The organizer of Finland's Slush startup event is relieved.
Until this morning, I was not sure whether we will see Slush, simply because the situation was changing so fast. But I'm super grateful that we're here, so makes me super happy.
Startups come to Slush for a variety of reasons. Some come to showcase new products and devices. Others are looking for investment. One example of a European success story is Helsinki delivery firm Wolt. DoorDash recently acquired it for nearly $8 billion.
I think overall, we're living through this kind of third industrial revolution where the world is going online. The internet is the main driver of change in our time. And I think what COVID has done is that COVID has accelerated that transition from offline to online.
The pandemic threatened to derail a decade's worth of progress for the continent's tech scene. Investors and founders prepared for the worst, but Europe's ecosystem weathered the storm and grew massively.
The amount of companies that are valued for 1 billion just this year is getting closer to the 100. So there is huge positive wave behind Europe, Nordics, and also Slush, what I'm actually now feeling and seeing at Slush.
European tech giants Spotify and Aiden both surged past $50 billion, according to a report by venture capital firm Atomico. Event organizers expect over $100 billion to be invested in European companies this year. That'd be a 150% increase from last year. Andrew Thomas, NTD News.
And there'll be a new hotel built from the ground up in Quebec, Canada this winter, the Hotel de Glace. It's going to be made entirely out of ice, but 30 workers will build it from 40,000 tons of snow. Although guests will sleep in igloos wrapped in warm blankets, it won't be a rough adventure. They're actually becoming more luxurious. They'll include hot tubs, fine dining, even evening entertainment. It's not the only one in existence. There are others. Sweden plowed the way with its first ice hotel opening in 1989. It's cool. That's the latest business updates for today, but you can still catch NTD Evening News with Stephanie Cox. That starts at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.